Hey traders, wild ride today, huh? If you blinked, you might have missed the action across the S&P, Nasdaq, and Dow. Let's break down everything that mattered on this Monday, April 21st, and get you locked in for tomorrow's open. You ready? Let's roll. Alright, kicking things off with the S&P 500, which managed to close just a hair below break-even, down 0.14% on the day. The index flirted with 5,030 but couldn't hold the gains into the close. A lot of back and forth as traders digested mixed earnings and fresh macro data. Over in the Nasdaq, we saw a bit more red, closing down 0.44%. Tech was under some pressure today, mostly thanks to a pullback in semiconductor names. And the Dow Jones. It was the outlier, up 0.18%. Powered by strong moves in consumer staples and industrials. Not flashy, but steady. Let's talk movers. Tesla, TSLA, took a hit, down over 3.2%, after reports that Q2 production could be weaker than expected. Some analysts even trimmed price targets midday. And with earnings coming Wednesday. Yeah, that's going to be a show. Nvidia, NVDA, slipped 2.1%, as the semis cooled off after a red-hot run. Traders seem to be rotating out a bit ahead of key earnings in the space next week. But on the upside, Procter Gamble, PG, jumped 4.5% after posting better-than-expected earnings and raising forward guidance. That gave the Dow some backbone today. Also worth noting, United Health, UNH, rebounded sharply, up 2.9%, after last week's drop on regulatory fears. That dip got bought hard. On the macro front, we got a cooler-than-expected Chicago Fed National Activity Index this morning, ticking in at -0.18 versus -0.10 expected. Not a huge number, but it adds to the growing chorus that the economy is losing just a bit of momentum. And then there was Fed speak. Governor Lisa Cook dropped a few comments at a housing summit, saying inflation is still too sticky for the Fed's liking and that patience is the prudent path forward. Translation: don't count on a rate cut in May. June's still a maybe. The 10-year yield nudged up to 4.41%, and the dollar index caught a slight bid. From a technical lens, keep your eyes on these levels. S&P 500, 5,000 is a psychological floor now. If we break that with volume, we could revisit the 4,930 area. On the upside, 5,080 remains resistance. Nasdaq Composite, watch 15,620. If that cracks, things could unwind fast toward 15,400. On the flip side, 15,850 is a wall bulls can't seem to punch through. Dow Jones, holding above 38,300. Bulls want to close above 38,500 for confirmation of a breakout. Volume was below average, which makes today's moves a little suspect. Tomorrow should give us more clarity. Sector-wise, here's the breakdown. Utilities and consumer staples led the day, both up over 1%. Classic risk-off rotation. Tech and communications dragged, down around 0.5% each. Financials were flat, but a few regional banks showed unusual volume. Zions Bancorp, Zion, and Fifth Third, FITB, both spiked midday on rumors of potential consolidation in the space. Nothing confirmed yet, but watch that tomorrow. Also unusual, Palantir, PLTR, traded 2.5x its average volume. No clear news, but it smells like someone's positioning ahead of earnings next week. Personally, I think we're in a wait-and-see mode until the big earnings hitters report midweek. We've had a strong Q1 run, but now traders are asking, can earnings justify these valuations? My radar is locked on Tesla and Meta this week, both can swing the Nasdaq big time. For tomorrow, I'm watching for dip buyers around 5,000 on the S&P. If they show up strong, that could be your cue for a short-term bounce. But if volume stays soft, I wouldn't be surprised to see more chop or even a flush towards support. Alright, that's a wrap for today. If you found this breakdown helpful, hit that like button. It really helps the channel grow. Drop your market outlook in the comments. Are we heading for a bounce or a breakdown? And don't forget to subscribe. I'll be back tomorrow after the close with another full recap. Trade smart, stay focused. I'll see you in the next one.